The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And happy Armageddon Day, folks. Yes, 10 years ago, somebody said that today would be hotter than a frying pan. We'll get into that a little bit and how we can gauge predictions and understand the motives behind some of them and some of the bigger ones that missed. I'll be doing that while we see how the market really starts moving out here. But for the most part, a muted response. I'm still looking out here. Dow's been kind of bouncing around the center line, which is kind of amazing thinking about Apple and Boeing and some of these other stocks that are in the NASDAQ and in the Dow. Of course, the S&P up slightly, up 3 points or so. Volume today has been continued well or good compared to a lot of last year, 2.77 billion shares, which is a pretty big day. Going into a Fed announcement, normally a lot lighter, but I think, we just had a lot of stocks that were out with earnings. Apple right now is off almost 5%. Boeing is off 8%. Capital One up almost 5%. Welltower, didn't know much about the stock before. Someone mentioned it in the den, up 5%. St. Jude Medical up 0.5%. Stryker up 3.7%. TripAdvisor off 3%. Tupperware brands, man, they must have lost their seal, minus 14%. United Technologies up 1.5%. VMware guiding down almost 10% off today. And a little bit of a treat out there from U.S. Steel.
Michael? We're bigger than U.S. Steel.
Oh, yes, we are, Mr. Hyman Roth, and off almost 14.5% today. So as we wait for these markets to wind up and decide if they're going to do anything with this information, right now kind of flat on the S&P. The others going to be a little bit weighted down. We got to a high of 1916, let's call it 1917 on the S&P cash. And, I think we can just kind of fool around here for a while. Last week, I thought that we would be messing around, at least in the S&P, probably and could be into the end of February. Don't have to, but I thought that we were probably going to make a fairly decent bounce. The Fed's announcement came out rather dovish today. All unicorns and rainbows. And it wasn't, it's a degree. It could have been a lot better. They took out some stuff. They put in some stuff. But for the most part, probably people are looking on a 1 to 10 scale. If we were 5 between dovish and hawkish, I think we went maybe 6.5 toward the dovish side if we were flipping a coin. And probably going to bounce around a little bit here, and everybody will try to figure out what it means tomorrow. Of course, we have a ton of earnings coming out after the bell tonight, and I think a lot of people are probably looking onto that. A ton of volume, not really a lot of movement except in the stocks that actually reported or had news. As always, we come to you between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
every day. And, of course, time to get a little history started.
And it's all just a little bit of history repeating.
I think I talked about this yesterday. I must have forgotten to get the new history for today. Let me see if I've got it here. See if there was anything new here today instead of my backup. After a protracted war with the new U.S. Securities and Exchange Commission, the New York Stock Exchange finally recommends an internal reorganization that will install a board of governors, a salaried independent president, and a specialized administrative staff. Previously, the exchange had functioned like a private gentleman's club with conduct enforced mainly by unspoken codes of honor and a pro bono president chosen from among his fellow brokers. And of course, after this, they actually had a president got paid to lay down the law. And this day in 1938. As we continue to wait for these numbers, as we kind of fade a little bit lower, and we're off 5.5 points. No one's getting rich on this move out here today. May make a little bit movie. I said I wanted to talk about bad predictions. Of course, Al Gore has been able to get a Nobel Prize and make over $250 million selling the fear into the world with global warming. I have no idea whether there's any global warming or not. We could have global cooling. The problem is that everybody is invested. When you dig in a little bit further, you find out that they quote 98% of all scientists agree that there is man-made global warming. Well, what you find out is that they sent all their survey to people that were basically in the business of working on man-made global warming. Not a valid test. Again, whether it's the market or some kind of prediction, there is a lot to it. And I just want to kind of talk about this, mostly because I had a little bit more than I was going to yesterday, because I had somebody asking. You know, there is, I've got a little sound clip also to play. We'll probably play that in the next segment. But just go through some predictions out there that actually cost people money. Decca Records said of the Beatles in 1962, "We don't like their sound. The guitar music is on the way out." Other people that made a big whopper, Thomas Watson, chairman of IBM in 1943, I think there's a world market for maybe 5 computers. X-rays will be proven a hoax. Lord Kelvin, president of the Royal Society in 1883. Other things. The horse is here to stay, but the automobile is only a novelty and a fad. The president of the Michigan Savings Bank advising Henry Ford's lawyer not to invest in the Ford Motor Company in 1903. And of course, Daryl Zanuck, a movie producer for 20th Century Fox in 1946. Television won't last because people will soon get tired of staring at a plywood box every night. And, of course, one of my favorites we posted in the den earlier. There's no reason for any individual to have a computer at his home. Ken Olsen, president and chairman of the founder of Digital Equipment Corporation, in a talk given in 1977 to the World Future Society meeting in Boston. Now, there are a few reasons sometimes we can make predictions. I thought maybe Apple would bounce, but there was probably something in there that I should have said, and that is what percentage I thought it would bounce. And the thing that you probably really should have known is whether I actually put any money behind it. As I stated in the show yesterday, I am all cash and going to stay all cash until we figure out what's going on here in the market. Off 8 points in the S&P cash. But we'll talk about why that is important. You can give me a call at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And we were talking about predictions while we're waiting for the market out here to settle out. It's just going to bounce around here a little bit. We're off 3 points on the S&P cash. 2.9 billion shares. I figure by the time we get into the bottom of the hour and I get into some charts, we'll actually have something out here. But for a market that had such a brutal earnings cycle last night and this morning, S&P not doing much. I thought we could have should have probably had a big gap down. And, especially when I start looking at some other things out there, like they were working extremely hard this morning to keep the dollar index down. It got up a little bit, still off 48 cents, but it looks to me like this is about as good as it gets, this 99 level in the dollar cash. I don't know if they're going to be able to move it back down. Probably the worst thing you can do is hang out at 99 for a long time and then not expect it to break through 100. I'd say 95% of the time it will. Anyway, one of the things that you can do to make things clearer, and I'll probably try to do more of this in the future, but is to say the percentage that I think will do it. Normally, stocks have to rise to a level that I'm pretty confident in. I say I have an abiding belief that I have an edge in the market. That doesn't only mean I know which way it's going, but there is enough money if I think it's going that way to actually play it. Right now, I am all cash because we are in this no man's land. I have almost no stocks compared to, I probably could have put in 200 or 300 last week. And I think I put in 50 or 60 each day in the newsletter of stocks that had been testing their lows on lighter volume. We went through how the energy came down. But I kind of thought that this was very appropriate. It's from Cam Newton. I'm not a football fan. I'll probably watch about 10 minutes of the Super Bowl, and that will be it. But I heard this, and I thought this was probably one of the more enlightening things when we come into predicting stocks.
Cam, before the Seattle game, a lot of the national media was down on this team. After you guys won that game, now a lot of the national media says this is one of the best teams we've seen this year. Do you ever find it comical the way that a lot of these people think, that, hey, this team's all right, this team's not good?
But I find all media comical at times. Because I think in you guys' profession, you can easily take back what you say. And you don't get, there's no danger, when somebody says it. If it was a pay cut, or if it was an incentive, if picking teams each and every week, you make it a raise. I guarantee you people will be watching what they say then.
Yes, they would, and probably well said. We look at a lot of other stocks. I get a handful of minutes or maybe even 30 seconds to look at the chart. I give you my instant reaction. When I put a position in my newsletter, I'll go back and look at a much broader part of the market. I've always got a model that pretty much, at least in my mind, I try to weigh, and that is 50% of the direction of the stock is the market. 25% is the sector, and 25% is the stock itself. So normally what I will do is go out and find a stock that looks like it is ready. I will find a sector that I think I have a edge in, and mostly I will stay out if I can until the market it has the wind at my back, whether that is bullish or bearish. We can tell a little bit of that from the volume out here. But at the same time, it is, if you really, why I will probably be very confident in some of these as we look at stocks. The ones that I'm willing to throw money at, of course, are in the newsletter, and that is the reason to get it. They rise above the average and into something I have an abiding belief in. Like right now, I told you, or yesterday, I have and are 100% cash in both newsletters. I think that will change shortly, but we made some good money. We got out. I'm not willing to give it back in a massive amount of chop. We're at 1904 on the S&P cash. Tonight and tomorrow will not be a whole lot different. Tonight after the bell, we've got Broadcom, Cirrus Logic, Core Labs, Discover Financial Service. Facebook, of course, is going to be a biggie. Hanes Brands, probably going to tell us a little bit about the retail market. Innovisense, Juniper Networks, Las Vegas Sands, probably going to tell us a lot about how China's doing. SanDisk Corporation is going to probably give us a little bit idea how the memory sector is doing. Of course, if we look at Micron, and we will in a minute, gives you an idea already. As I said, I think Micron's probably got a good future, but it is a second half of the year future. Texas Instrument, Tractor Supply, United Rentals, and Vertex Pharmaceuticals. So we're going to have kind of a little mini Super Bowl tonight of earnings. And, of course, Autech goes right into earnings in the morning also. So let's get through this, and hopefully you understand maybe what I talk about here a little bit more. I probably haven't been as clear as I probably should have on that, but I don't think everybody gets the idea of why I've got a newsletter, right? Those are the things that I'm actually throwing my own money at, and my subscribers will not subscribe if I am consistently incorrect. I will only prosper in that newsletter if they prosper. There's nothing I can do at the scale that anybody operates at a retail level to game the system. And we can just continue to move on that. As I said, of course, we've got earnings after the bell in some of these stocks. Micron Technology, I think we had some people call when it was around 14 bucks. I didn't think a whole lot about it. I did think that the market was headed lower. We did go out and make a fairly high volume low. That suggests that you're at least going to come back and do that. Of course, many stocks in the tech sector have continued to be weak as we've looked at stocks like Apple. I thought maybe they would just hold out a few more days and let Apple pop, or at least get to the level that would make it look like it. But they closed their books just as they said they would on the dates they said they would, and came up just a little short. Of course, a lot of people looked at some of the new margins coming from some of the other products, especially the products in music, and yawned a great deal. And of course, everything that everybody's been looking for, they thought that Apple could end up being a Netflix. And of course, I brought this up months and probably even a year ago, and that is just how many people truly hate Apple in Hollywood. And that has continued, and why they don't have even a skinny package to sell yet. We'll talk more about this. We'll look at the Apple chart when we come back, and we'll talk a little bit more about Apple. You can give me a call at 877-927-6648. You can email me at path@tfnn.com and post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I was just thinking about playing that Hyman Roth clip earlier. I should have gotten the one for Abe Vigoda. Can you get me back? Can you get me off mic? For just old time's sake. What a great part of it. That movie was just so great, wasn't it? And of course, I liked him as Fish later on. and Barney Miller. And actually, I think he had his own fish show, didn't he, for a couple of years? Man, you kind of think how fast life turns, but he was at like 95 or something. Well, I enjoyed it. Somebody had a great question in the den, and I've expanded upon it in my newsletter, including that artists in Variety and some of the other billboards have posted really nasty ads in it over the last year, going after Apple. And of course, if you're in the music business, you've watched your sales go down to a tenth of what they were before Apple got in to music. You can't think that it was a great thing. And if you're in the video business, you got to be thinking, man, look what they did for music. They decimated it. In fact, I've got an article that we're going to talk about with Tom O'Brien on Friday of just who truly is making money in the industry. And you're going to be shocked who's actually making money in recording. There's a handful of people, but you won't guess who's actually making the most amount of money. It will shock you. Anyway, we'll talk about that on Friday. But what we can say is that everybody was afraid that they would have a single entity, let's say Apple, that just took over all the business, cut everybody else out like Netflix, and they were able to club the industry by themselves and tell everybody what they were going to pay and what they didn't. We saw Apple and even Amazon go to court over price fixing in the PDF book market. And I think they've changed that now to where they have their own proprietary book format. I wouldn't buy one other than PDF format. But it is one of those things where people say it from time to time in the den, and that is if you own the bank $100,000, the bank owns you. If you own the bank $1 billion, you own the bank. And that is the problem. Nobody in content wants to be beholden to a single company. They like that there's Hulu. They like that maybe there's a big company like Netflix. What is going to happen when Apple controls all the phone business to the upper echelon, the people that are more likely to spend money on anything, and you have to only go through Apple? And that is what content producers are scared to death against. I'm going to talk about it Friday, but last week there was a convention that I used to go to that was down in Miami, and it was the Content Producers Convention, and a lot of very interesting articles that I'll get into on Friday with that. But let me put it this way. There's nobody in content production that wants to boy, I've got a great saying, and I would not be allowed on the air ever again if I ever said it. But man, I would love to say it. Anyway, it's very illustrative of the problem. And that is if you get into bed with Apple, you have to be ready for the extreme downside. And to the point, the people in the music business haven't really screamed. The artists have. The deal that Apple really made with them is to continue screwing over the artists and trying to at least shift as much of that money back to the record labels and the people higher up the food stream, and the ridiculous little amount of money. And like I said, I think you'll be shocked when I talk about the who were the big three money makers this year and why. And it had nothing to do with Apple in the music business. Anyway, Apple energy on the way down was higher. This is why I do not play the bounce in any stock, single stock that would do this. Of course, you're going to have a market like today. You're going to see it bounce. I still think that we could get back up to 1950, even 1970 on the S&P cash. But it's going to be a lot of this kind of back and forth. I don't want to get torn up in the chop. Could Apple test 92 and then go back up to 105 and 107? That's probably where I would want to be. Looking at their earnings and looking through it, it looks like they will not be having any good news, at least until third quarter when their next iPhone comes out. And I just don't know how many people are even going to buy that. They talked a great deal of the number that the dollar actually has cost them at this level from previous months. A dollar index printing 99 right as we speak. And it is very interesting. Apple cost them they said that the dollar exchange rate from a year ago cost them $5 billion. And I think they only missed by very little in the revenue department. That $5 billion would have easily masked out if any issue. So again, probably the most interesting thing is going to be when we get numbers from these companies, we can see whether or not and how the dollar and its movement is really going to affect these companies in the near future. Anyway, we're at 1,900 on the S&P cash. So let's start looking at some of these companies other than Apple that did report last night. Boeing off almost 8%. And 117.78. We are down testing the previous low. Certainly a lot of volume in comparison. We have pierced the previous low. We are closing back above it. Energy was higher on the way down than way up. Just on a natural retracement, we should be looking for numbers that on the 618, which is 128.61 for the 382. 50% retracement also would be 132.80. And to me, if you were going to short this thing, I would want to get there. This thing does have a confluence area that is also a congestion area. I think I would probably have to wait at least until I got the 132.80 to pull the trigger on this one. Not that it couldn't. The only reason is you've got two more gaps above it, and maybe it could even get into that gap in the 137 range. So you've got some nice gaps up there, and I would not want to bet that at least on the short term doesn't get it. It is not uncommon, especially on first moves down in bear markets, to get a huge retracement, even with heavier energy down. And then, of course, everybody gets all bullish and happy again, and the volume falls out, and it is time to act. When we come back, we'll look at Capital One, which is up, and we'll look at Stryker Company and Tupperware. Man, Tupperware, 14%. What did they do? I don't know. We'll find out. Be back in.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We'll check back in and see rather muted move so far in the S&P cash until the last couple of minutes when now we were down at the kind of at the lows of the session, off 11 points. Again, if you would have told me this morning when we were looking at the open that we would be down 11 points by the end of the day, I'd probably say it was kind of a victory. But we'll see whether or not this holds. But I don't see a lot of momentum in here. We certainly have a ton of volume over the last hour, closing in on 3.2 billion shares on the New York Stock Exchange tape. So there is some juice out there. Let's see what we have. Wanted to get back on that. We said we'd look at. Let's go look at Tupperware since it got the biggest beating today. The proverbial red-headed stepchild. What do we have out here now? This has made its pretty much third move down. We can say that that's probably the third ABC, probably getting pretty close to an exhaustion move for volume out here today. If you listened last week, or even the last few weeks, I've been talking about how volume comes in, and sometimes it's a little too light, sometimes it's just right, sometimes it's way too much. This would be way too much. Normally signals kind of a total washout. Again, energy has been down fairly strong since this high back, what is this, April 23rd of 2014. This thing's done nothing but go down. Now, even this one, if you're thinking about a trade, I don't know, after 3 ABC downs, you're going to pull the trigger on it. I think there's probably some stocks that are higher out here. But if you are trying to weigh risk and rewards, this is an excellent example of one where you've got confluence. So you know probably the high end if you'd been short on this for a while. And that's about $54.60 to $54.19. You've got a very clean, let me zoom in on this one. You've got a very clean movement out here. I wouldn't be surprised to see this stock back up here just under this $54 level. And then you've got that high volume low out there that needs to go retest. Not a bad trade. I would probably look for something with a little bit more meat on the bone, but a fairly interesting trade out there if the stock market continues to head lower. UTX, not a whole lot. VMware getting a also rather big haircut. This thing's been on a tear down since EMC and Dell have kind of conspired to make this their piggy bank. And by doing so, selling shares, doing everything else to raise cash so EMC could, so Dell can raise and buy EMC. I'm not exactly sure how far that's going to go. In fact, let's take a quick look at EMC. I keep on thinking that looking at the prices of EMC, that this trading at around 23 bucks right now, and of course Dell's offer is somewhere around 30 bucks. Kind of makes me think that the market still doesn't think this has a snowball's chance in Hades of ever getting back up there. VMware, one of the better technologies out there, and it looks to me like EMC is more than willing to burn this thing at the stake to get what's going on. For you who don't know, VMware makes what are known as virtualized routers, and by using the virtualized router, instead of going and plugging in new wires, changing this wire from that wire, you just physically change virtually change the routing inside the router, and it takes care of everything. So you don't have to physically have somebody go there and plug one wire into something else. You can also update the firmware, and you can have one router that actually is physically separated in memory into multiple segments. So if you had let's say a 100-point router, you could make 20 of those one domain, and 40 of them another, and the other 40 maybe another one. A lot of versatility, especially if you're working in very big data farms. The problem has really come in that a lot of people are getting very nervous about buying VMware's stuff because of what EMC's plans are. They still seem to have the best plan for virtualized routers, but a lot of people just extremely nervous about getting into bed lately with VMware for the products because of the way Dell and EMC have done. This is where a partner is generally a good thing. In this case, though, absolutely horrific. The reason why is that the plan for EMC would be to highly dilute the shares of VMware and move a lot of that cash into EMC. I'm not exactly sure that that's even legal, and I wonder if it actually came to fruition, whether or not VMware would sue and probably prevail. The question would be, how long does it take to prevail? Does EMC just do it and then wait for the blowback after it's been bought by Dell? A lot of moving pieces in this, and this may be one of the better buys. I like Micron, probably midsummer. We'll have to see how the rest of the market does. I like VMware probably when this all balances out, but they are kind of guiding down a little bit too, and having maybe they were a little optimistic on what was going to happen in China. See if I've got out any other new emails out here. Nothing I see. Anything in the den? Can you look at Pan W? I certainly can. We got plenty of time left. Pan W. What else do we have out here? Come on, PAN. If I could type PANW. And this is in an upper trading range, although it did spike the previous low with higher volume, not much higher volume. This is one of the darlings of Wall Street. It's had about the same energy up as the way down. You do have kind of a smaller three gap play. Could I see this thing back at 175.85 before I would want to reshort this? I think that would probably be it, and this may be a good place to go. All of these, of course, security companies sucking wind, FireEye, these things just continue down. I'm thinking if the market does finally kind of bury itself at the bottom in some of these, you've got a pretty good move. In FireEye, you're pretty much up to 29 bucks. So you almost have a 50% move in this. That just takes you back to the top of the gap back in November the 5th. And, of course, you've got that confluence line right there at 29.34 to 29.80, which is pretty tight. And that's where you would probably want to reshort it again if it got back up. And if you got a very nice test of low, you thought maybe this sector could turn around in the general market, you might want to think that it could get back up there on just a bounce. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yes, we've got the Tom O'Brien Show after this one. For the next 2 hours, we'll be going through those earnings as they come out in the 4 o'clock hour and going into the last hour. And I jumped the gun. I think this is the first time I've ever jumped the gun and thinking that the show was over. It's probably because I'm looking at about 3 screens during every break, trying to figure out what's going on in this market, if I can actually get anything out of it. Other than it looks like gold's at 125, and we've got a market that keeps on trying to go a little lower, and lots of energy. But we're only 12 points off the S&P cash. And we'll see how the rest of it goes here. And what else? Well, I want to look at CyberArk, which is another stock in that sector, as PanW and FireEye. And, you know, you've got some consolidation and congestion zones back up here. So there isn't a whole lot that's very clear. You have been kind of trying to get back into this $33 level for a while, which is the January 29th, 2015 low. This thing kind of went back higher, did break higher on June 18th with much lighter volume, instantly came right back into the trading range. It's been under pressure since then. As one of the things that I do like off this recent low in CyberArk, it's one of the few stocks that actually came off the bottom with a sign of strength. On the 13th, it did pop very well, 7.3 million shares. It's been kind of trying to come back down here, and it has been coming down on light volume. If there was a stock out here that would bottom first, my guess might be it would be CyberArk out here. FireEye looks to me like it may have time. It needs some time. Even if the market started going higher, it would need some time for some consolidation. I do like the fact there's a few stocks out here in the market that did have a nice move off the low with a big sign of energy. Almost no stocks have done that. What else did we have out here that I wanted to look at before the end of the day? Wanted to get back to Amazon. Got somebody what is it? AMZN. See how this thing is doing. Haven't looked at it in a few days. We talked about how this one was a beautiful example of confluence and came within, well, the range, which was 544.76 to 538. Yeah, 538. Where's it? Yeah, 538, 544. So it came within $3 of that on January 20th and started its bounce, and not bad. Again, so far the energy has not been higher than the way down, but we've only come half the way. So we've got probably a much longer way. Energy looks like it would be higher. Now we got to the 382 retracement on Amazon, which was the 604.20 level. I still think this thing can get to 621 and maybe even 630 in the bounce in the coming weeks. And at that point, we would see maybe a much better chance to pull a short on some of these other ones. I'm just saying, probably for me to get the risk reward correct, we're going to have a bounce out here. If it does go and blow out the lows, then guess what? I'm going to wait for it to bounce, go back up to what was resistance and now, was support and is now resistance, and start all over again. But to get risk reward correct, we're going to have to get at least some kind of bounce out of these markets. We're not quite there, especially in the stocks that are the most loved in the market. In the meantime, as I said in the previous break, so when you can, not when you have to. Cover when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.